Good morning, everybody. It's Thursday, December 19th, 5:25 a.m. Central Time. Grain markets are lower this morning. March corn futures down 1.25 at 436. January soybeans down 0.75 at 951. March Chicago wheat down 9 cents at 532.25. March Kansas City wheat down 6.5 at 542.25. March spring wheat down 4.25 at 587.75. We've got an absolute mess of a situation in Washington. Why don't we start there?
So, President-elect Donald Trump is opposing the Stopgap U.S. government spending bill. During an interview on Fox News, Trump stated that he is totally against the bill. Trump doesn't have the power to veto the bill. Obviously, he isn't president yet. In the past, however, he has shown a willingness to leverage his influence over Republican lawmakers to oppose spending bills. The spending package, if passed, will fund the government through mid-March. If it fails, the government could partially shut down as early as Saturday. The bill contains $31 billion overall for U.S. farmers.
We thought this was a done deal. We thought they were going to vote on it tonight, and this would all be signed into law effectively. The farm aid was going to be guaranteed, and now it looks very different. The timeline of events yesterday is extremely interesting. It started on Twitter, or X of all places, with Elon, and Elon posted about the funding bill more than 100 times over the course of the day. He repeatedly called the bill criminal. He asked his followers to call their representatives. He also posted just all sorts of different stuff here. He said no bills should be passed Congress until January 20th when Donald Trump takes office. None, zero. He posted a picture of the bill, which is 1,500 pages. He said, ever seen a bigger piece of pork? And no, he's not a representative or a government official yet, but he's got Trump's ear. I mean, they've been like best buddies now for a while. It's like every time you see one, you see the other. They're always together. Following all of Elon's stuff, Trump joined in later in the day. And this is a statement that that J.D. Vance posted. And he said this is a statement from Trump and from Vice President-elect J.D. Vance. I'm going to read the whole thing for you guys who are listening because it's important. The most foolish and inept thing ever done by congressional Republicans was allowing our country to hit the debt ceiling in 2025. It was a mistake and is now something that must be addressed. Meanwhile, Congress is considering a spending bill that would give sweetheart provisions for government censors and for Liz Cheney. The bill would make it easier to hide the records of the corrupt January 6th committee, which accomplished nothing for the American people and hid security failures that happened that day. This bill would also give Congress a pay increase while many Americans are struggling this Christmas. Increasing the debt ceiling is not great, but we'd rather do it on Biden's watch. If Democrats won't cooperate on the debt ceiling now, what makes anyone think they would do it in June during our administration? Let's have this debate now. And we should pass a streamlined spending bill that doesn't give Chuck Schumer and the Democrat Party everything they want. Republicans want to support our farmers, pay for disaster relief, and set our country up for success in 2025. The only way to do this is with a temporary funding bill without Democrat giveaways combined with an increase in the debt ceiling. Anything else is a betrayal of our country. Republicans must get smart and tough. If Democrats threaten to shut down the government unless we give them everything they want, then call their bluff. It is Schumer and Biden who are holding up aid to our farmers and disaster relief. This chaos would not be happening if we had a real president. We will in 32 days. So Trump chimed in a little bit later. Sorry, I'm skipping around on charts here. And he said, yeah, I'm not in favor of it either. And then you had all sorts of politicians on Twitter and X saying, yeah, I'm not in favor of it either. I'm not voting for it. House Majority Leader Steve Scalise was asked if the current bill is now dead. And he said, yes, it's dead. A Trump transition team official was asked why Trump waited to announce his opposition until hours after Musk and others had criticized the bill. He said, he let everyone wondered what he wanted to do. All eyes were on him. When he moved, it was over. He's president before becoming president. So is the bill dead? I don't know. It kind of sounds like it is. Is there going to be a vote tonight? I have no idea. The deadline is what? Is it Friday night or Saturday?
Friday night, yep.
So what I've been told to this point is that they may try to break out the farm aid piece as a separate piece of legislation, but we don't know. This is probably going to be different again by the time you guys see this. We'll have more tomorrow morning, I would assume, but that's what we know as of right now. Okay, now we'll go to my soybean chart.
Alrighty, so soybean futures collapsed on Wednesday. The most heavily traded March 25 contract lost more than 25 cents per bushel. On a continuation basis, spot futures posted their lowest trade since late August. The breakout below technical support earlier this week likely induced additional selling. Fund traders were estimated to have sold 20,000 contracts. The list of bearish items with regard to the marketplace remains lengthy.
March futures into fresh lows, and when that happened, the selling accelerated. On a continuation basis, we were a little bit cheaper back in August. 936 was the low there, but you're getting back to like pre-COVID trade war type price levels. Speaking of the list of bearish items, it reads something like this. You've got expectations of a monster Brazilian crop. You've got nearly ideal weather in Brazil. We'll get to that in a second. Record global ending stocks expected, largest stocks to use ratio since 2018, 2019 expected, possible trade wars, tariff implications ahead, Brazil currency weakness. I mean, there's just a lot of negative things going on here. I don't have anything nice to say about the situation. So, yeah, we'll see. Do we find some footing here before year end? A lot of people thought maybe trading volumes and volatility would back off, as we get into a holiday trade, and it's not what's happening in the soybean market.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium videos?
We had two yesterday. We did a Farm Act update or a direct payment detail update video with Paul Neiffer, and Paul laid out exactly what you guys can expect with regard to direct payments, laid out by crop, per acre, all the stipulations, limitations. Paul will be back today because some of the stuff that he mentioned yesterday has had time to refine it. He had about 2 hours to put this together. So he's got some refined details, and we're also going to answer a bunch of questions about this that came in from our premium subscriber base. But again, a lot of this could still change here depending on what happens in the next 48 hours. Brian Split was on also with Mackenzie yesterday and did charts, talked about the soybean collapse in particular. What are some of the downside targets that he expects potentially given the big downside breakout? Brian's fantastic with charts. He does charts with us every 2 weeks. He covered a whole bunch of other markets too, but soybean one is probably the biggest one. If you want to see the premium stuff, go to standardgrain.com this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. You'll get all of our videos. Our morning email includes all that stuff at 5 a.m. Central Time every day. All of my cash grain marketing recommendations, charts, graphics, a ton of stuff every single day. Give that deal a shot, guys.
Estimates of Brazil's soybean crop continue to increase. According to consulting group Patrio Agronegocios, this season's crop is expected to reach 170.4 million metric tons compared to USDA's most recent estimate of 169 million metric tons. Brazil's corn crop is estimated at 129.3 million metric tons. Weather patterns have been favorable as of late. Soybean growers in Brazil recently completed this year's planting campaign.
You're going to see more estimates in the 170s. I wouldn't be surprised if at some point somebody printed a 180 if the weather continues to cooperate in Brazil. This is a map from our friends at Crop Profit. Expected precipitation as a percentage of normal. In the vast majority of Brazilian soybean growing areas over the next 14 days, you're going to see above normal precipitation. The only place that will not see above normal precipitation is the far south, and they have been excessively wet in some of those areas. So I don't think the dryness is necessarily a problem. Brazil is going to be the largest soybean producer on the planet. Of course, they're projected to account for 40% of global soybean production this year, and that 169 million metric tons that USDA has penciled in, that could very well be light. They also issued a corn production estimate. And just to give you some context with regard to corn, the U.S. is still number one and by a country mile when it comes to corn production. China would be second, and Brazil would be a distant third. The Brazilian corn crop, the second crop in particular, does matter. It's their big export crop. It provides the U.S. with a little bit of competition. But make no mistake, the United States is still king when it comes to world corn production.
U.S. ethanol production was strong again last week. Weekly output of 1.1 million barrels per day was up 2.3% on the week and up 2.7% compared to the same week last year. Ethanol stocks were pegged at 22.6 million barrels. The print was down slightly compared to the previous week, but up 2.4% versus the same week last year. Implied gasoline demand was up 1.3% compared to the previous week and up 1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 2.9% compared to the same period last year.
Ethanol production is strong. We have nothing bad to say about it. USDA told us as much in their most recent report. They increased their projection for corn demand via ethanol, and they may have to do it again if this sort of production pace continues, which we hope that it does. We need all the demand we can get.
The Biden administration has awarded $116 million to the fertilizer industry. The funds were provided with the intent to increase competition and lower costs within the industry. They were distributed to 8 facilities to help expand fertilizer production across 9 states. The investment comes as lawmakers and ag groups criticize the consolidation of the $140 billion U.S. fertilizer industry. The USDA's fertilizer program has awarded a total of $517 million to 76 fertilizer production facilities. Supply chain issues over the past few years have caused the U.S. to focus on increasing its fertilizer supply independence.
So the White House is sending money to the fertilizer industry. Does that mean fertilizer prices are going to come down for our crowd here?
Absolutely not.
No.
No.
No chance in hell. No. All right, cool story. What's next?
So the Federal Reserve, they cut interest rates by a 1/4 percentage point on Wednesday. The reduction marked the Fed's 3rd consecutive rate cut and brought its benchmark short-term rate to a range of 4.25% to 4.5%. The cut comes despite an uptick in inflation since September and the stock market remaining near all-time highs. The Fed indicated it will likely reduce rates only twice in 2025 rather than the 4 cuts forecast back in September. 2 additional rate cuts are expected in 2026 and then 1 in 2027. The stock market crumbled following the Fed's announcement. The Dow Jones declined 2.6%, the S&P 500 fell 3%, and the Nasdaq lost 3.6%.
So they're now talking only 2 cuts next year, which is not what the trade had expected. The effective Fed fund rate is now down to 4 3/8. So it's come off of that high, which was 5 1/4, somewhere in that neighborhood. If you look at the dot plot, yeah, the expectation is just slightly higher for longer. I mean, the expectation is that we're going to continue to cut, but maybe not at an aggressive pace like some people had expected. The stock market got hammered yesterday, worst one-day loss in the S&P since August. We're still up 23% year to date, but the market didn't like this. We'll see. We're trading a little bit higher in stocks this morning. We'll see what happens later in the day today, I guess.
USDA reported 2 flash sales on Wednesday. U.S. exporters sold 5 million bushels of corn and 120,000 metric tons of soybean cake and meal to Colombia for delivery during the current marketing year.
Good to see demand. Another flash sale of corn. We saw one, I think, 2 days ago, and these are the first flash sales of corn that we saw in a couple weeks. So good to see. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 42 cents to $1.42 lower. Feeders saw losses ranging from 47 cents down to 97 cents. Box beef was lower also. Choice ended the day at 314.84. That was down 79 cents. And select ended the day at 285.55. That was down 2.95.
A little bit of movement in the outside markets. U.S. dollar's off a little bit. The stocks are attempting a rebound. The S&P's up 23 points. The Dow's up 160. Bonds are off a little bit. Gold's down $22. Crude oil is down 15 cents in the February WTI, 69.87 last trade. Have a great day, guys. We'll be back on Friday